Hello, everyone. This is Rick Carpenter. I wanted to take this opportunity to share some information with you about how you can balance having affordable health insurance with protecting your estate in a proper way. Now, the reason I'm doing this is because I do believe in proper estate planning, and I know a lot of people who pay way too much for health insurance for fear of the very, very rare catastrophic event that is probably never going to happen, but that they want to protect themselves against. So what I want to do is share some information that might be helpful for you to be able to have something you can afford in terms of health insurance coverage and be able to protect your estate at the same time. So allow me to introduce myself. First of all, I've been a full-time insurance broker agent for about 8 years. I have a law degree, which is a Juris Doctorate degree. My specialty is healthcare law, but as part of law school, I did also study estate planning, wills, trusts, estates, and all that. I'm licensed for insurance in multiple states. If you are in a different state than what you see on my list, I have friends and colleagues that I respect and trust. I could refer them to you. Now, we all buy insurance, but why do we buy it? What does it actually protect? Life insurance isn't going to keep you alive. Car insurance won't prevent a car accident. Homeowner insurance won't stop a kitchen fire or a slip and fall on your property if somebody comes up your steps. Health insurance, in most cases, isn't going to always keep you healthy. I mean, if you go to the doctor for a well checkup once in a while, that's going to help, but that's not going to prevent you from getting a serious disease. So why bother having insurance? Insurance protects our assets, our money. That's basically it. It protects your ability to replace what you lost, whether it be your car or your home. It protects you from legal liability if somebody were to have an accident on your property, a slip and fall, a dog bite, or whatever. You can have protection from that. You can also avoid credit or other financial difficulties because you would be protected from a loss. When you summarize all insurance products, they basically accomplish this same thing. So, question is, do we over or under insure ourselves? Okay. A typical car insurance policy might be, $25,000 per person injury. I'm talking a liability here. $50,000 per accident. Okay. Well, if you hit a Mercedes-Benz or another high-end vehicle, or if you cause significant bodily injury, this is probably not enough coverage, and you might end up going bankrupt over it. Another thing I have found is that while an insurance company might pay the claim, they will then turn around and sue the party who is deficient on the coverage. I've seen many such cases. Homeowners insurance, if you have a $300,000 home and a $100,000 liability, which is very common, well, that may be enough to replace your house, but a $100,000 liability policy might not be enough to protect you in the event somebody injures themselves on your property. You might end up being bankrupt because of liability. Health insurance policies, traditional major medical policies, are typically unlimited. Yeah, you have a premium, and then you have a deductible, and then you have co-insurance up to some out-of-pocket maximum. And then after that, they're typically unlimited up to $1 million or $5 million or something like that. Okay? And we often just accept that because we're worried about things like cancer, serious accidents, or other catastrophic events that can happen to our health. I have only seen one person ever in my life go over the $1 million mark with regard to a health claim. And that was a person who was on an insurance plan that was designed to be inefficient and exorbitant and wasteful. Having health insurance that is unlimited like that really makes no sense to me at all, because there really is no such thing as an unlimited cost medical event. Everything has some dollar amount to it. We don't know that ahead of time, but I find that typically a $250,000 per year plan will cover 99.5% of anything that would ever happen. So having an unlimited plan, we end up paying a whole lot more for our coverage than we need to for things that are really not going to happen. Now, because health insurance is so costly, people often do without. They go without coverage at all because of the cost. They just assume the full risk and they receive no basic care to keep themselves healthy moving forward. It's people like this who end up with diseases and other problems that could have been detected and perhaps cured and prevented had they been seeing a doctor on a semi-regular basis. Other people pay way too much trying to protect against every conceivable occurrence, no matter how costly that is. That's the part that makes no sense to me. And then there are other people who pay only for catastrophic coverage, who are willing to cover the little things, but typically they don't cover the little things. They just forego that basic care. They don't ever go to the doctor. They don't keep up with their normal routine visits, and their health can suffer because of that. So how much insurance is enough? Well, there's no set answer to that. It really depends on some factors. It depends on your net worth. If your net worth is $200,000, it really makes no sense to have $1 million of insurance coverage. If you have financial exposure, maybe to for your business, if you own a business and you don't want your business to become available for recovery in a lawsuit, you need to think about that. You need to think about what you stand to lose should something happen to you, whether it's health insurance or liability insurance. What's the value of your business? And that works both with liability, but if you as a key person in your business were to become ill and you cannot work, how is that going to affect the viability in the future of your business? How about the dependency on continuous income? If you do become chronically ill and you're unable to work for a while, how is that going to affect your ability to pay the mortgage and the car payment and keep the lights on? These are things that must be considered. How to figure the right amount of insurance out? Look at your net worth. What is your net worth? Are you worth $250,000? Then you should probably have $250,000 worth of health insurance. What's the value of your home? You should have enough to cover the loan amount, let alone the equity of your home. You should have enough to cover basic monthly expenses for a while. And this is a critical illness policy. This is not necessarily health insurance. This is like an AFLAC policy. I provide them as well, but these are policies designed to help you pay the bills as you get through a medical event. This is important because most medical bankruptcies that I know of in this country were not because of a lack of health insurance. It was because of a lack of the ability to pay the bills while a person was getting through an event like cancer. Okay. How about if you have a medical event and there is a balance remaining after your insurance settles? You might have a $250,000 event and your insurance pays $200,000 and you're left owing $50,000. How are you going to pay that? Well, you might need to think about these kinds of things to have a little bit of additional coverage in there, whether it's critical illness or whatever. These are things to consider. Now, this last one is not an end-all, end-of-the-world type of scenario. There are other ways to deal with that. But these are things to consider when trying to figure out the right amount of insurance. But your net worth, your business value, other things in your life have a finite value, and I would recommend that you balance your insurance coverage with the finite value of the things in your life and not go for the unlimited, very inefficient, bloated coverage. Here's my suggestion on how to accomplish this. Instead of buying too big of a coverage, an unlimited plan with more than you really need, first of all, buy a plan that you can afford. This is important for a couple of reasons. Number one, because when people don't buy something they can afford, they either don't buy anything at all and leave themselves completely exposed to risk. Otherwise, they will buy a plan that only covers catastrophic and not cover the small things. And they really don't get any value out of their coverage. And they're likely to never get value out of that coverage. Secondly, buy a policy that is usable for the small things, not just catastrophic events. Again, it goes back to maintaining your health and not just protecting against the things that we hope would never happen. Okay. And on the subject of catastrophic, don't buy a plan just because of expensive, rare catastrophic events. Don't buy it because you're afraid of the unthinkable apocalyptic events. While we do want to protect from those, don't buy just because of that. Buy a plan that you can actually use in the meantime, because if you buy a plan that you can use for the small things, that helps to prevent the catastrophic. And that's one thing that a lot of people fail to think about, is they think that they only want a catastrophic plan, but when they don't take care of the health, when it's the simple small things, they increase their chances dramatically for one of these major events to occur in their lives. Now, as a last resort, your options, of course, are bankruptcy protection. And while I am not a fan of people who are irresponsible or unethical in the use of bankruptcy protection, charge up your credit cards and then try to get them dismissed in bankruptcy, that is not what I'm talking about. But it is possible that you could protect yourself to a reasonable degree and be responsible, but none of us can really protect ourselves from the unthinkable. Okay, if I have $500,000 of business liability insurance and somehow I end up with $1 million judgment against me, that's not because I was irresponsible. And if I simply cannot afford that, if I simply cannot pay that debt because of that liability, and it's going to potentially cost me everything else I own, I have rights under the bankruptcy laws. The same is true with a car accident. The same is true with health. I am not a fan of over-insuring because of the unthinkable, highly unlikely catastrophic events. If you insure yourself at a sensible level for the things that are likely to happen and some things that are unlikely, but not the extreme rare meteor hitting you in the head kind of events, your rights under the bankruptcy laws, to me, are perfectly appropriate to protect yourself. Okay. The other thing, too, is if you do have to use bankruptcy laws, that doesn't need to affect assets owned by a trust that you have established. And I'm going to talk more about the trust here in a minute. Now, the other thing I want to point out, though, too, is that most providers accept monthly payments. So let's talk about someone who really has no assets. You're young, you're just getting started in life, and you don't have any net worth, really. So you could afford to have a smaller policy that will cover you for the basic things and some reasonable amount of serious illness or injury. And if you have an event that exceeds that, then you could probably just go to the provider, the doctor, the hospital, and make an arrangement. I see arrangements all the time where people are paying $50 or $100 a month and sometimes no interest. So these people are willing to work with us to be able to get their money. And very often they just don't even want to worry about it. They'll just write off a balance if it's reasonable and move on because they don't like accounts receivable. It costs them money to chase money. So here's how I would accomplish this. Number one, I'd get a family trust in place. Do it earlier rather than later in life. Don't wait till you're 60 or 65 thinking that it's just for end of life. It isn't. It's for life. It's to protect your family while you have kids at home. It's to protect your assets from liabilities of all kinds. Okay? It can protect you from insurmountable medical bills. It can protect you from legal liability related to a property or auto accident. If you hit a Mercedes-Benz, if you hit somebody else and they are killed as a result of the accident, and what might be a multi-million-dollar lawsuit against your estate, a trust just might protect you. Some more advantages to consider. Okay. First of all, when I help people with sensible, affordable health insurance, I typically save them 40 to 60% off of the monthly premiums they have been paying. I take people all the time who are paying over $1,000 a month and put them down into, a few hundred. And so when they can save $4 or $5 or $6 or $7,000 a year just on their premiums and get rid of most or all of their big deductibles, the cost of establishing a trust is minuscule compared to the amount of savings you receive by getting off of an overpriced plan and getting onto a more sensible health insurance policy. The periodic adjustments to your trust, when children are born, when assets are changed, things like that, to spend a few dollars with your attorney to make the adjustments is cheap. So I wouldn't let that be an obstacle at all, because the whole time you are protecting everything you've worked all your lives for, even if you're relatively young. So I would not hesitate. Get a lower cost insurance policy, protect from the apocalyptic stuff with the use of a trust. With this type of better insurance policy, you have better coverage. You have first dollar coverage for simple things like the doctor visits, preventive care, urgent care. And with preventive care, I mean physicals, mammograms, colonoscopies, and things like that. With a trust, you have better protection from all kinds of personal liability, not just catastrophic medical bills. So anything that anybody can sue you for, anything that could happen to you medically, a trust can help protect your assets and your family's livelihood and future. What to do? Number one, if this makes sense to you, and if you feel like you're overpaying for health insurance, contact me. Let's put together a quote. It's free. It's no obligation. Let's see if what I have to offer you makes financial sense for you. I work away from the federal marketplace most of the time. I help people get rid of those ridiculous deductibles and ridiculous premiums, save money with coverage they can actually use today rather than waiting until they can satisfy some big dumb deductible. So let's get you some health insurance you can actually use. It costs a lot less. Secondly, contact an estate planning or life planning attorney. These people can help you protect everything you have, everything you work for, everything you hope to have in the future. And with this sensible combination here, you can have the best insurance coverage without overdoing it and ensure that your family is going to have their lives and their livelihood protected now and into the future. Please feel free to reach out to me if you have further questions. If you need help with an attorney referral, let me know, because I know several people, some of which are all around the country, and I can steer you in a right and sensible direction. Thanks very much.